Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. If you're new to the channel, make sure that you like and subscribe. If you like the content, put out cryptocurrency and traditional market videos just about every single day. If you have any specific requests on something you'd like me to take a look at or something you'd like to have explained, feel free to leave that in the comments as well, as I do greatly appreciate the interactions. So here we've got our Bitcoin chart. I'm on a shorter time frame for this one right here, and what I'm looking at is the 1 hour, and this is our Bitcoin Bitstamp chart. I'm sorry. And again, if you're not familiar, these indicators are all proprietary indicators, but I do offer them for free. So if you just go down to the video description, you can find all these on TradingView and add them to your own charts as well. So essentially what I'm looking at here is our 8 in red and the 21 in yellow. And I'm paying attention because what's happening is they're coiling up here. And now we defended the cross once. We crossed to the downside, symboling that we would potentially be like reversing the trend, or at least like starting to get like some sort of retracement. But we were able to save it right afterwards. And then we had multiple attempts in a row again to break down below it. We did close below it, but we've been able to save it again. So essentially what's been holding up the price now is our 50 and 55 here in the light green and the darker green. So you'll see we hit both of them right here, and it push price up aggressively. Then we hit just the 55 here and it pushed price up. I'm sorry, just the 50, and it pushed price up. And then we came down, tried to save it again on the 50, but then came down to the 55 and then bounced it. And then we were able to save it again, able to save it again, able to save it again. And what that tells me is that's good. It's bullish because we're staying above it. But typically when you see an area get rejected, what you want to see, and it can get rejected to the up or the downside, what you want to see is an aggressive rejection. You want to see something like this. You push down to it, and then the bulls right here step in and push the price straight back up. It's a hard rejection. Here, same thing happens again. We come down to it, and then we get a hard rejection. Like it's pushed away violently. The price does not want to be near there. So anybody that sees that, sees down in this area, looks at that as a buying opportunity, and then price moves away from it immediately. And you'll see we were kind of getting that, and it's getting lesser and lesser each time. So we're getting less people coming in to buy, and we're getting less response like in that direction to the upside. So to me, that's looking like a potential time when we could look at, a retracement or potential reversal at some point in time in the future. Now the reversal will come way later, but the actual retracement itself is what we're paying attention to, because now if we switch over to a longer time frame, what we're going to see is that actually corresponds with our longer time frame. Now I'm on the 4-hour moving averages. So this 8-hour that's been holding up price right here, we've been unable to close below it, except for right here we closed below it, immediately pushed back up, and then you'll see again we closed below it right here, tried to push up, and then we got a stronger rejection from the upside and then came down to it. So what this is telling me is that we're losing strength to the upside. Now you could look at this as essentially like a bullish reset of the indicator oscillators. We were getting like way too extended to the upside, so the oscillators will reset as price action goes sideways, and then when the time comes, typically when the red histogram runs into our blue slope line, you'll get like an aggressive pushback up to the upside. So if we see that happen, if we see the histogram turn green and start bouncing off of our blue slope line, that's positive, and we could easily break out of this area, take out that high of 41,385 on the 4-hour candle close, and then potentially basically like take out our parabolic SAR here in red, and then get continuation to the upside, which I believe our next target is between like 50 and 52,000 for our next substantial like Fib Extensions. So that would be a nice move, another like over 20% move to the upside, and absolutely phenomenal. So also, what we're looking at down here is on the Stoch slope. This is basically our two stochastics blended into a single line here. So when they're headed to the upside, it'll be blue. When they're headed to the downside, it'll be red. And then we also have the RSI here in white with the exponential, the moving average of the RSI as well. So right now what we're noticing is we flipped over red, and we've actually left the bullish control zone here at 80. So now the bulls are no longer in control, because typically if the bulls are in control, you'll see price action like this on the indicator. You'll see we come down to a lower level, it gets bought up, and then we move back to the upside. And sometimes this will happen just over and over again. But when this comes down out of that red bullish control zone, it means temporarily at least the bulls have lost control, and then you usually get an aggressive sell-off. Now that doesn't mean a reversal in price, it just means a retracement. So here you'll see we came all the way down to the 50 and 55, and then we came down here to the 89 as well. And as long as we're in an uptrend, these are key levels that we want to take, like accumulation or rebuy if we've taken profits up in this area. So you'll see that exactly like we said, we came down here and basically bounced that slope line right there, and although the histogram continued under it, we moved back to the upside. Same thing here, when the slope flipped back over, moved back to the upside, took out the high in continuation. So we're looking here to see what happens. Are we going to bounce right here off the slope line and get continuation? Are we going to come down below it, but the price action is going to get bought up either off of we'll be looking for a rebuy off of 39,185 or off the 50-55 down here at basically like 36,000. In the event that we get a violent sell-off, we could come down as low as our 89, which would be 31.2, basically 31,200. Or again, we have our 200 exponential. At this point in time, it's much less likely that we would just sell down through all of these. We would typically like stair step down if we were going to get a retracement, but that would take us down first to the exponential at like 28,000, and then the simple closer to like 26,000. So, and keep in mind that these will continue to move to the upside as long as price action is above them. So even if we do start stair stepping down, in the event that we started selling off for a retracement, these would continue to move up. So our targets are going to be shifting to the upside as we do go. So in the event that this is a bullish reset going on right here, the first thing we would pay attention for is, do we start closing and then opening below the 8 moving average? And then do we potentially cross, get below the 21 and then potentially cross the 8 and the 21? And you'll notice that throughout this trend, every single time from when we came off the 200 way back here, we crossed the 8 above the 21. And look, came down, we saved it right here, we saved it right here, we saved it right here, even saved it right here after that violent sell-off. So now what would you expect to happen? Even if price action closes below it, we would expect that this is going to get saved. So even if we do start closing below here, we're going to expect that they're going to take a rebuy. Bulls will buy off of the 55, 50, off of the 89, off of the 200 even, which is often the best buy on a sell-off. But we would expect that this 8 and 21 would get saved. And again, once that happens, if it does cross to the downside, then we could potentially look for, bearish price action or a legit retracement, anywhere from like 30 to 50%, something like that. But as far as I'm concerned, or more realistically, 30 to 40%. As long as we continue to save this 8 and 21 though, I'm not going to get bearish in this market because we're trading with the trend, and that's the idea of these moving averages. So inside of that trend, we can use our parabolic SAR and the binary pivots to give us a better idea of like a micro trend on that same time frame. So you'll notice here we had a small trend to the downside, then we had a nice trend to the upside, then we had a small trend to the downside, then we potentially have another nice trend to the upside. So that's what we're paying attention to on this chart. So now if we flip over next here, this is again still Bitcoin, but I just have it done a little bit differently. I have some different indicators on the chart, and then I also have some different lines drawn and whatnot. So we have basically, this was our top point that we were trying to break out of, and then when we finally broke out of this area, broke out of this like triangle ascending, we essentially got like the consolidation, and then we've stayed on top of it this whole time. And then here we closed down below it, but we faked out and got back above it. And then look, we started forming this flag right here. And it looked like the first time we were going to break down from the flag, and then we came back above and got our continuation. But now look, we're not able to stay above this red line that had previously been, resistance back here, and then it was support, 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 and then now look, we got above it, support, but slightly below it, and now look, it's acting as resistance. So if we come up here enough times and we can't get above it, even though we're potentially moving up higher and slowly creeping up on price action, we would expect to come down here and retest this previous diagonal down here, and depending when that happened, that would line up with some of our moving averages. But the real point of support is going to be like the convergence of all these previous little trend lines that we had going on here, and they all have like a different meaning, different support, but the key target down here based on these trend lines will be that 36,250 range, because that's where you see a bunch of them clustering up. So people are going to look at this line, people are going to look at this line, this line, this line, this line. Might not look at all the exact same ones, but when you have a bunch of them that all come together in the same area like that, that means the more people are likely to notice that exact same thing you're looking at. Whether they notice all of them or just one of them, it gives you a highly likelihood that either bots, algos, or just traders are going to notice that, and you'll see some kind of support, at least temporarily, if not before our next break to the upside. And now if we look right here at the Jewel Thief, you'll notice that we're essentially putting in like a descending broadening wedge here on our oscillator. You know, we have the knife coming up high, then coming down lower, then coming up slightly less high, then coming down lower, then coming up slightly less high. So what we're looking for now is, do we stay inside this, or do we get a break to the upside, signaling that now we've essentially gotten that bullish reset and now we're ready to push back to the upside? Or do we come down here and continue to sell off and potentially break out of the bottom? Now again, you want to stay bullish in these markets until they give you a reason not to. And then now here, looking at our Fisher Transform next, you'll notice that each of these peaks, the green is much more substantial than the red. So the red should be used in this situation as a buying opportunity. Every time we sell down to it was a good place to accumulate or buy before a move to the upside. But now here, that last move after our buy right here, that would have been our buy. This last move put in a lower high and was much less substantial to like our previous moves. Like if you took a buy right here, you got a nice powerful push to the upside. If you took a buy right here, you got nice powerful push and continuation to the upside. So now that we're back at it, the first time we bounced it, we got almost no bounce off of it. So if we bounce it again, you know, and we don't get any kind of action, we would expect it to sell down here in red and then potentially get a little more violent of a sell-off and a potential buy to come in. And then once again, looking at the waddah attar explosion, you'll see now what we look for here is not only the size of our indicator oscillator like candles right here to show that there's a lot of volume, because typically the volume spikes will be highs and lows. You know, obviously if it's green or red, that will correspond to if it's bullish or bearish. And then we also have the slope line here. When it's blue, it says that it's strengthening in that direction. When it's yellow, it says it's losing strength in that direction. So when it's blue and the candles are green, we're gaining strength to the upside. When it's blue and the candles are red, which would be right here, it means we're gaining strength to the downside. So when this flips over from blue to yellow, it typically shows you that we're getting a reversal in the direction of that trend, at least temporarily. So you'll see here, we had red selling off, and then once it flipped back from blue to yellow, it said, okay, we're done selling off now, we're going to get continuation to the upside. And the same way that when it was blue right here through this area, we're getting a powerful move to the upside, and then it sells back off. And look, we're losing strength, but it never actually gained strength to the downside this whole time through here. It just basically floated up. So we never had a powerful sell-off since then. So there was no reason to get bearish once again on this entire price action up here. So we just stay in our positions. And now let's flip over to a slightly longer time frame. Once again, we're going to go back to the 4 hour, and now you'll see how these lines are a little more important now. You see how important this yellow line has been holding up price action since 17,550. Support, support, you know, slightly underneath it, but never lost it. Support, support, sold off to it, never closed below it. Support, and now we're moving away from that powerfully. So the most likely thing to happen when you start moving away from it powerfully, eventually when you chop out, you come back to it and find support again. So that was one of our main lines right here where all these things are lining up. So again, that's going to give us a very high likelihood of our target to come back down here to that 36,000 range and find support. So we're paying attention to that. And then once again, you'll notice the blue has crossed below the purple. We have left the bullish control zone, and now we're slowly just creeping down here. So what we want to pay attention for is the knife here going to get a powerful stab to the downside like this, a powerful stab, a powerful stab, a powerful stab, and then we can use that as a buying opportunity, assuming that the trend is going to continue to the upside. So that once again would correspond with our target right down here. And then again, we're going to look at the Fisher Transform first, and you'll notice here we basically get this little mountaintop right here, sell back off, but barely. The price action moves all this way up throughout the green, all the way up here, but then when it sells back off, as it peaks and comes down to the red, it only retraces a portion of the move. So that's obviously very bullish. And then once again, green moves all the way up here, and then we get this little retracement, and then green moves all the way up here. So when it sells back off here, we would expect a slighter retracement. So from our last peak down here in red, that was our bottom, or that was our bottom if you go by the candle. So if we sell back off, we would expect that bottom to come in somewhere above this previous bottom, as we're getting powerful moves to the upside and then weaker moves to the downside, and then powerful moves to the upside and weaker moves to the downside. So we want to keep putting in higher lows, and that's what we're going to pay attention to on this indicator. So once again, everything is lining up just like we talked about. And then we're going to look at the waddah attar explosion as well. And you'll notice on the waddah attar, we were getting a powerful move to the upside here, and then we sell off, but never violently. Even though it flips red, we never actually flip the slope back over blue, signaling a strong trend to the downside. So then once again, green and blue, green and blue, powerful move to the upside. Here we get that sell-off. It's a violent sell-off, but it never even flips the slope over blue. So we're never getting a powerful sell-off based on volume and based on price action. So even though it looks violent, we get bought right back up, and then continuation immediately flips back over to blue. So we have the blue and green is a powerful trend to the upside. Now here we are losing strength to the upside. We flipped it back over yellow, and now we're getting the selling pressure coming in. We're getting these red candles come in, signaling that we would get a sell-off, once again lining up with our targets, but we're not seeing it flip over blue yet. Now if it starts violently selling off and we see this slope line flip over blue, then we're going to start paying attention to a potential bounce, lower high, and then continuation sell-off. But as far as I'm concerned, and you know, if that came down here, got a slight bounce, and then continuation, we would expect it to essentially get saved at this point right here, either the yellow diagonal or a horizontal right around that 32,000 range. And now if something like that happened, then we would really start paying attention to, are we putting in a neckline here for a potential bounce again, a rejection, and then continual sell-off there, and then potentially topping out the trend or getting a substantial retracement? Or are we coming down here, bouncing, and then continuing to the upside? So that's what we're paying attention to on the 4-hour using these indicator oscillators. And then finally, we're going to look at one more Bitcoin chart. This one is on Bitfinex. And again, the actual exchange that I'm looking at is much less important. I just like to use these specific indicators in combination with each other to get a very good idea as to, you know, what they're telling me and the way they correspond with each other. Because if you use something like a stochastic RSI and an RSI all on the same chart, you basically have a bunch of stuff telling you the same thing. You're telling you, are you overbought or oversold? You're telling you, is the strength of the trend increasing or is it decreasing? And then you're telling you know, the stochastic RSI is just a combination of the two of them. So you don't want to use an indicator of an indicator when you're already using both those indicators. It makes no sense. But I see people doing it all the time, and it just, you know, to someone that's experienced, it makes it very clear that they don't know what they're doing. So now, regardless, next we have the 1 hour on Bitfinex. And again, what I'm paying attention to here now is standard deviations. Okay, this is a standard deviation indicator oscillator right here, and what that's going to tell us is how likely the move is to continue in that direction, and the more standard deviations it goes in that direction, the less likely it is to continue in that direction. So essentially what happens is, I'm going to turn this off real quick. You'll see that we get a big area opens up right here, and then we'll see the area contracts. And then when the area contracts like that around price action, that's telling us there's about to be a pivot. So then here we get the contraction and a pivot to the upside. The pivot eventually gets rejected at the higher standard deviation range, and then we get consolidation, and then we come back to the pivot again, and now the market is deciding, do we want to keep going to the upside or sell off? And then look, continuation, and then come back down to a pivot, and then sell off. But it's like, you know, to the bottom of the range, and then actually in the opposite direction. So the pivots here, where they come together, where we get that squeeze, tells us typically we're about to see a big move. So when we see after that little squeeze that we recently had, we tried to push to the upside but could not get up. So what that tells me is we're going to get a situation like this where we have a smaller little squeeze area and then we get a little more violent of a move. So I'm expecting a little more violent of a move down here, or a little more violent of the move up here to take out the high, and then continuation in that direction is most likely going to happen. So that's what we're paying attention to on the 1 hour, and that's how we can get a clear idea if you're not sure when to take a position, when the trend is potentially going to move either more in that direction or more in the opposite direction. These give you a good idea, and then also give you an idea as to how high or low price action might go in accordance. So And then here we have the VPCI. VPCI is very good for essentially trading with the trend to find good buys and sells. So right now we're in an uptrend. So what that means is when we see these green dots, that's the best time to buy. It does not necessarily mean when we see the red dot, it's the best time to sell. Typically what's going to happen is the contrary to the trend that you're in, color is the buy opportunity or the sell opportunity, but the ones in that direction show that we're strengthening in that direction. So when we get these strong sell-offs right here and we see those green dots, that's a buy. When we see the red dot like this though, that just means there's strength to the upside. We're likely to get continuation in that direction. So we're not getting, just because we see a bunch of red dots like this, we don't see the first red dot and take a sell. That looks to us like a strong move in that direction is likely to follow. And you'll notice we get continuation, and then finally we get the sell off. And then as soon as we get the sell off, the green looks like a buy opportunity. And then again, we see the red that's showing strength in that direction. And then you'll notice even when we get the cross back to the downside, price action keeps floating up. And that's why we don't want to take these as a sell signal in an uptrend. We do want to take these as a buy signal in an uptrend. And inversely, if we were in a downtrend, we would want to take the reds when that's like essentially we get a bounce, back up, dead cat bounce, and then we want to sell into it. But the greens are going to typically show, or you get a bunch of greens in a row because we're strengthening to the downside, and then volume price is confirming the price action here as well. So it's essentially saying, are there any divergences? Are we strengthening or weakening? And should we get worried? And then finally, we want to look at this right here. And what this is going to tell us is essentially the same thing. We have an overall green uptrend, and then inside of that slope line, that green slope line, we have this little blue that's telling us like we're getting a powerful move to the upside, and then the purple is telling us we're consolidating. And then once we start selling off below that slope line and we flip it back to the downside, the slope is no longer to the upside, we're essentially getting a red, and those reds are the best times to accumulate. So you'll notice all these red parts that we get right here, that was one of the best times to buy, that was one of the best times to buy, and now here we're getting one right here, and it's looking a little more substantial. It's looking a little bit more like this. So we want to pay attention now. Is this going to be a buying opportunity and get continuation, or is this going to start looking red and then getting a sell-off? Because essentially what this is doing is it's taking your price and your volume, combining the two together, and then subtracting out the buy and sell volume. So as long as there's more buying taking place than selling, we're going to continue to the upside and continue doing this. If at some point in time we enter a bear market and we start getting more selling than buying consistently, we will start to get this to flip over red and it will go lower. But overall, this should always be going up and green because it's saying that there's more buying volume coming in than selling volume, and we're just going to keep pushing on up here. So that's what we're paying attention to on this time frame. And then if we switch over now to the 4 hour, you'll notice once again, just like I said, this red right here would be a buying opportunity, and then we keep moving up. This red right here would be a buying opportunity, and then we keep moving up. Buying opportunity, and then we keep moving up. Buying opportunity, and we keep moving up. So now we want to pay attention now here too. Are we going to just come back down here again and bounce it? Are we going to bounce it like this and keep moving up? Or are we going to now get underneath it, flip this slope over, and start seeing more selling than buying, telling us that we're looking at a legitimate retracement? Okay, and once again you'll see the same thing. The green dots right here are a buying opportunity. The red dots are typically showing you we're getting like a lot of volume and a lot of price action, but not necessarily to sell out of your position. Again, this should be for accumulation. This does not necessarily, just as we get a powerful move to the upside, doesn't mean you want to sell, because we never really went back down. We just are moving strong to the upside, but we're still in an uptrend, still in an uptrend, still in an uptrend, still in an uptrend. So if we start seeing these green dots show up again, that's telling us we really want to be accumulating until we start seeing that the red dots are disappearing and the green dots are happening more and more often, telling us that, based on that indicator alone, that the trend is potentially flipping to a more bearish trend. And then once again, you see all through this area, whenever we're looking at the contraction and expansion of the standard deviations, we can get an idea as to what we're looking at. So we get the contraction here, we know we're about to get a violent move. We get the contraction here, we know we're about to get a violent move. Contraction here, violent move. Contraction here, violent move. Contraction here, violent move. So that's what we're paying attention now. We're at a contraction phase right here. So are we going to get a violent move to the upside, or are we going to get a violent move to the downside? Now what I like to pay attention to with this on this time frame is we got a big one like this with potential to the upside and potential to the downside, and then we just traded sideways through the next one. We started to get a sell-off and then we saved it. So now are we going to start to get a sell-off and then push to the upside and break out of this consolidation? Or are we going to start to get essentially like a push to the upside and then sell off and break out of the consolidation to the downside? So we want to pay close attention to that, as that's going to tell us like what we should look forward to in the markets. And then once again, you'll notice we have essentially support and resistance diagonals here. We have the measured move from our previous targets. So here we were putting in a descending broadening wedge right here. And then when we finally broke to the upside, you'll notice here too, I have a heart line, a center line in this descending broadening wedge. We spoke about this bunches and bunches of times, that what happens often with these is you touch the bottom, touch the top, touch the bottom, touch the top, come back down to the midline, and then come back down to the top, and that's typically when you see the break, because we essentially sold back off, but only to the halfway point, and then when we come back to the top and we get this sell-off and then it gets bought back up and closes outside of it, we would expect our measure move to take place. So this is our conservative measure move in green, and that's our more aggressive measure move in blue, and as you'll see, we immediately got the follow-through of that. And then we started forming our next little wedge right here as well. And we were looking at if we potentially got the breakdown from the wedge, that it would take us down to our previous support line right here. Instead, we just broke down from the wedge and then got bought back up, but we were unable to get back above the top here, the top line in red. And then we also started running into this long-term top line. So now essentially what I'm paying attention to here is we have a giant broadening wedge that's been taking place. And it's been taking place since back here at 20,000 from our breakout of the previous price high. So this red is our resistance 1 time, 2 times, 3 times, 4 times, and now that's our 5th time, that previous top right there. So if we come back up and we touch it again, what would we expect it to do? We would expect it to give us our measure move break of this flag right here back to the top and a $44,000 price target roughly, somewhere right around that area, 44,000. Now look, if we go back down here and we look at the bottom, we look at our support, we have this blue support line that's going all the way up here. So that was our support all through here. That was our support here, our support here, our support here, all through this area. And now look, if we break down from this and come back down, say we just broke down violently right now, we would expect that support to hold up anywhere between 35.5 and 36.75. 36,750. So right around that area would be the support of this wedge. And then in the event that we broke down from this wedge, we would take our measure move accordingly from the breakdown point, or to the upside inversely. Just clone this real quick. Switch it over to blue. And I just like to color coordinate my little breakout targets. You don't need to do that. It's not necessarily. But that's going to take us up to like our 53,000 range, roughly 52, 53,000. And then give us another one of those potential targets lining up as well. So, and now I do want to go to let's take it out to our daily right here. And I want to pay attention to our Fib extensions now. So these are our Fib extensions right here. And it's tough to tell because now I'm on the daily. Exactly what's going on with all my arrows and everything because I'm looking at it at a shorter time frame. But what we're paying attention to is when we break out, if we break out to the upside and get that move up, the 1.5 is going to come in at 48,700. The 1.618 is going to come in at 60,000. The 1.886 of the previous move is going to come in at that 42,000 top. And then if we get continuation from there, we could potentially end up anywhere around like those $100,000 targets, etc. But we're also paying attention to our Fib circles. And this chart, is obviously crazy right now. But essentially this is our top to bottom right here is the blue Fib circles right there. And then the Fibonacci retracement is all the way from our previous top way back here in December 2017. Was that 18? December? No, 2017. Yeah, I don't know. The dates are wrong on that. But that's our top to bottom Fib. And then that's our top to bottom Fib right there. And then these are the Fib extensions in red and orange. And then the actual Fib circle is from the overall top previously at 20,000 to the bottom down here at 3,000. So now that's what we're paying attention to, is this blue line on the fibs. So we got up to this, and then that symbolized when we broke out of that, we were going to get continuation to the next ring, which when we broke out above that, we're paying attention now. That is our blue line right here. So we broke above it, found support, and then we're slowly moving away from it. So if we broke down to it again and got that measured move, that's going to take us down to our fib circle. If we broke above it though, you'll see our next fib target on the fib circle lines up with the break of the triangle to the top of the channel, and then a break of the top of the channel to the top target here, and that's going to come in right around that 53,000 mark. So there's just a couple ways to look at Bitcoin, a couple different exchanges and a couple different time frames. Again, I like to always say trade with the trend. The trend is your friend until the end. You know, we are obviously in a bull run, bull market, bull trend, whatever you want to call it. As far as Bitcoin dominance, this is exactly what we talked about for a while now. Exactly what we said happened. This is our weekly chart, Bitcoin dominance. We came up here, got rejected on the 200s, got rejected, but never a violent rejection. Previously, this 200 was way back up here when we were in like the 90 plus range. So as soon as we bounced up and started crossing, as soon as the 8 and 21 crossed right here, we got a powerful move to the 89, consolidated at it, 821 crossed again, got a powerful move up to the 200s, consolidated at it, and now here we've broken above it. So now we're on top of it. We broke up, we retested that previous mark, we got the exact move up to the 74% range that we had talked about, 73.92%, and then right after that, we sold back off. That was our double top basically. Now we're above the 200 moving averages. That's extremely bullish. So if we find support right here, which we are obviously doing, we're at the 618 fib of the top to bottom sell-off, and then we're also on top of the moving averages. That is literally the beginning of a trend in Bitcoin dominance, saying that Bitcoin is going to be strengthening. So there's two ways that Bitcoin dominance strengthens. Bitcoin dominance either strengthens because Bitcoin is going up faster than the altcoins, or Bitcoin dominance strengthens because the altcoins are selling off more violently, or Bitcoin is selling off less. So it's becoming more of the market cap. Either one of those two things could happen. So if we got a retracement right now and came down, the alts would be selling off like 20, 30, 50%. Bitcoin might be selling off 10%. If we got to move to the upside, Bitcoin might be going up 100%. Altcoins might be going up 50%. All it's telling us is that trending money, more value, more market cap is going into Bitcoin than into altcoins. So our next target is going to be roughly up here at the 786 and the Fib Extensions, in that like 82 to 85% range. So what that tells me is that very soon Bitcoin, and we could get a retracement right here, but I wouldn't expect it to stay below this 200 moving average for long. And if it did, I would expect it to sell off from the exponential, come back down to the 0.5 fib and the 200 simple, and then find support, and then get continuation up to the 786. Get our breakout, get our continuation, get our fib extension, and hit that 80 plus target. And that's going to say that Bitcoin is making up a larger percentage of the total crypto market cap. And then finally, let's flip over to the actual crypto market cap. And once again, exactly like we said happened, we came up to the retest of the previous all-time high crypto market cap, and then we found a little bit of resistance and then broke straight through it, exactly like I said. And then we hit over the 1.618 target on the first pump, first candle, first weekly, and now here we are in the middle of pushing up to that next target, which is the 1.236 from the top to the bottom right here, all the way up 123.6%, which would give us the 1,220 billion mark. So that is our next target. 1 trillion, actually it's closer to, let's say 1,240 billion. That's our potential next target up here if we get continuation. We are in the middle of a strong parabolic uptrend, but what I want to pay attention to is this is our weekly chart, and you'll see here once we got into this purple area is typically where we topped out on the weekly. So we either found resistance and sold off immediately, got inside of it and sold off, got inside of it and sold off, inside of it and sold off, inside of it, bear market. Okay, got inside of it and got rejected, couldn't make it up, got up to it, got rejected, and now here we are at literally the very top of it, and the only time we have ever gotten this high in all of history was the 2017 all-time high, and we are nearly at that point right now. So I'm not saying that this run is over. I'm not saying that this is done. We could easily get a situation like this where The first one was a little rejection at the beginning. Then we get a push up to it. But this is a powerful push, more reminiscent of the top than the initial push right here. So again, we could top out in this area. We could break through it slightly and come back down and then get another push up and then potentially start putting in divergence on this. But we could still get another 2 drives after the initial sell-off and retracement. It does not mean that this trend is just going to end and we're going to sell off here. It does mean that we're very, very close to the top of a potential parabolic move. And you'll see that when we look at how this looks on our log scale chart, the parabolic uptrend right here, it looks reminiscent to one of these moves. It looks like one of these big moves right here. Nice retracement back to the 8, hold for a little bit, potentially even come down and touch the 21, and then continuation. So that's what we're paying attention to. And then once again, if we look down here at the Stoch slope, it's the same thing. We have a bunch of red in a row before we ever top out. We're only now getting like our second bullish control zone, like push. So I don't think that this trend is just going to end. It's more likely something like this, where we're just going to cool back down for a little bit, get a sell-off back from either the 21 or the 55. If we came back down to the 21 right now, if we just sold off tomorrow, that would take us back down to that 556 billion range. That would be like a 50% sell-off in the overall value of crypto. If we came back down and retested that previous high before we broke out and touched that 55, that's going to give us down here to the 389 billion, which would be basically like a 60% sell-off of our overall market cap. So again, I'm not saying that this trend is over. I'm just saying that we are very close to the top of at least a short-term pullback or possible violent retracement. So well, there you have it, guys. Just wanted to take a nice little in-depth look at Bitcoin. I will take a look at some other assets as well, as quite a few things have been catching my eye. I've been very busy with this group over the last few months, and with everything going on with the channel and everything like that, decided to take a little step back from the group and just relax and focus on myself, focus on everything for the new year, how we're going to grow the channel, how we're going to continue to grow our bank account and investments, paying attention to like taxes and potential moves, rebalancing portfolios, potential asset shifts with the, elections and whatnot, how everything's looking with the big V, all that stuff. Just wanted to take a step back, take a week off, little staycation. The massive amount of volatility in these markets has been absolutely phenomenal. So I have been taking advantage of that as well for some nice scalp trades. Got a very nice scalp trade out of this area down here, and am still in that to the upside. But the important thing is everyone is getting very bullish on these markets right now. People that I was telling about crypto and telling about gold and telling about, Tesla and these different assets when they were at super low prices and amazing value. I bought the largest portion of my Bitcoin on this run at $4,000. So now we're at over $40,000. So we've 10x'd from where I was telling people to buy. And, it's not financial advice. I'm not your financial advisor. I was basically just trying to spread the word on Bitcoin and tell people to pay attention to it, and look at potential gains or investments or, accumulating whatever. Nobody was having it. People were talking about how it was dead. Didn't it sell off from 20,000? All that stuff. That was at 4,000. Ethereum is now at over 1,300. I bought the largest amount of Ethereum I have ever purchased at around like $85 to $90, roughly in that range. And now we're at 1,300. So since then, Ethereum has over 15x'd. And once again, everybody is telling me now how bullish all these things are and everything, and how they want to buy into it, how their fund managers, how, their friends, how their bank accounts all want to get into this. And to tell you the truth, I don't like buying things when they're up this high. I don't like buying them when they're overextended. I like to accumulate things when no one's looking. And I was buying gold at 800. I was buying it on the breakout of the pattern at 1,300. And, I was selling it at 2,000 because that's essentially like where you plan to top out. And same with silver. I was accumulating silver everywhere from, $13 to $17. And no one was paying attention. People were talking about how it was a dead asset. My average cost on silver was $15 and we hit 30. We were just back at 28 again. So that's over 100% on silver. I'm just not the type of person who's looking to massively accumulate into assets or FOMO in after they've already had, amazing runs. And 100% move in something like silver or gold is an amazing run. A 10 or 15x in something like cryptocurrency is an amazing run. But, I don't see any reason to be buying or investing at these levels. It's different to trade at these levels, to swing or scalp, but this is not the area where you want to be accumulating. You're buying someone's bags at these levels, and this whole big mental game that everyone's playing about how, this is the best time to buy, there's no Bitcoin, nobody's selling, all the institutional money is coming in. It's very important that you pay attention to one thing that these people are saying. One, all right, Michael Saylor, for instance, is, Fundstrat put a ton of money in, or not Fundstrat. I can't remember the name of his thing. But, everybody's talking about him. He's all over the place doing interviews. He started buying in a ton of crypto at 10,600 and then bought again at about 19,000, whatever. So, his average cost is somewhere between like $15,000 and $20,000 per coin. So he's already doubled that money. That's absolutely phenomenal. And for that amount of money, that's absolutely phenomenal. When I first started listening to him, I thought he was an idiot and he didn't really understand crypto. And just listening to some of the stuff he said didn't make sense. And it was clear to me that he was still very new to the game. But the more I listened to him, the more I realized that he is very smart and he is definitely paying attention to this. But essentially what he's looking at this crypto is he's looking at it as, one, a hedge against the system, two, a protection against inflation, and three, he's looking at it as a lazy bet, because you can make the most amount of money on something when you have capital by deploying that capital into something that's going to grow, into a business that's going to grow, whatever. You can be lazy and do a stock buyback and just raise the price of your own stock because you can't figure out what to do with this money. So those are two different ways you can spend your money. So the same as just having a bunch of cash on the sideline that's getting devalued and saying, well, if Bitcoin on an average annual basis goes up 20%, I can take out inflation and make sure that not only do I not lose my money, but I protect its value and, don't have to worry about it depreciating essentially, or having less buying power in the future. But one thing that really scares me about hearing what he's saying is he's talking about a store of value over the next 50 or 100 years. We're talking about an asset that's 10 or 12 years old, that's technologically based, as a potential hedge or protection for 20 to 50 years in the future, 100 years in the future. I don't like that. If I was going to protect my wealth, protect my cash, protect my value, protect my assets, I want to go with the longest, most proven thing, not going to go with a risky, speculative, quote-unquote investment or whatever. So you can say that Bitcoin is digital gold. I have no problem with that. It's in one of the most successful bull markets over a 12-year period of any asset. It does live on shorter cycles than most assets. A lot of assets are in 10 and 20 and 50-year cycles. Bitcoin is obviously in more of a 4-year cycle based on the halving and whatnot, or halving. But I don't think that most people are looking at it the same way that him and Chamath and all these guys are looking at it. They are looking at it as Chamath Palihapitiya, I think you say it, or something like that. Very smart man, owned a very large portion of Bitcoin. He's, awesome investor, great man as far as I'm concerned, and hearing his ideas about, growing his wealth, investing in companies, and then his overall goal of decreasing global warming and, negative climate change, as a legacy, that's amazing. That's what all people should do. They should get rich and then do something with their money to make the world better. But if you hear what he says, what does he call Bitcoin? He calls it schmuck insurance against the system. He's not invested in this with a huge portion of his wealth to make gains. He's invested in it to protect himself if the overall system crashes. And while it looks like things are going down and cash is getting devalued and the world's coming to an end, think about how many times over the last, 1,000 years, 100 years, 50 years, 20 years, 10 years, 5 years, how many times we thought that this was going to be the end of it. The most likely thing to happen is that the system makes adaptations and continues to work. You know, it's the Lindy effect. The longer something has been, the longer it is likely to continue being. So I think that it's a great speculative investment. It's a great hedge. I love crypto, and I think there's definitely a future in it, but I would not be looking at Bitcoin or any other cryptocurrencies as a speculative investment or store of value for the next 50 years. You know, I'm just very cautious to look at it that way, because if you look at things like, and I'm not saying this is going to happen, I'm not hating on crypto or Bitcoin, don't take it the wrong way, but if you look at, you know, social media, we had MySpace. MySpace was the bee's knees. Everybody loved MySpace. It was amazing. Nothing was ever going to stop MySpace. And then what happened? Facebook came along and absolutely crushed it. And MySpace doesn't even exist anymore, as far as people have never even heard of it, don't know what it is, etc. So that was our first mover, and it was the best, and it got absolutely crushed. And think about the internet. Think about Internet Explorer, and think about, you know, all this other stuff, and then look at, what do you have now? You know, what's your top search engine? Google. Who uses Google? Everyone. Once again, got crushed, and whatever came next was better than it. So I'm not saying that something's going to come along and crush Bitcoin, but I'm just saying that based on historical innovations in technology, more likely than not, something is going to come along and dethrone Bitcoin. So maybe it goes up another 2 years, 5 years, 10 years, 100 years. Maybe I'm wrong, but I don't think that it's an intelligent investment or intelligent store of value to sit here and say that you're going to put everything in it. I think it's smart to put a portion of your cash in it. I think it's smart to have a hedge in it. I think it's smart to buy the dips, accumulate some, you know, with spare cash or whatever. But the last thing I think people should be doing right now is, you know, speculating on something that's been around for 12 years and is not even fully understood by most people. Because the truth is, with technology and innovation and mining and everything how it is, if all of a sudden we get quantum computing and, you know, let's say for instance China develops a new set of miners and doesn't sell them to the rest of the world, and just all of a sudden says, okay, we're going to turn on these massive quantum computers and turn them onto the Bitcoin network and generate more than 50% of the overall hash power. I understand that the Bitcoin network is more secure than it's ever been, based on the amount of miners and the amount of hash power that's going into it. But if all of a sudden China or the USA or whoever, some government, some nationalized government, you know, some company, whatever, develops a new innovative technology, you know, like quantum computing, they can all of a sudden just massively crush the hash. And then what do they gain? They gain power of the entire network. It would essentially be a 51% attack on the Bitcoin network, and then they could take over, they could double spend, they could essentially hijack the network, and then it's in their control. Because the way Bitcoin is designed, the way the white paper specifically words it, you know, the longest chain is the best chain. So if something all of a sudden starts processing the SHA, you know, algorithm, the 256 faster, and then it now has the longest chain, all the other miners now have to switch over to that chain. And then not only did they just hijack the chain, but now anybody that wants to continue mining Bitcoin has to mine on that chain, or else they essentially are now a hard fork off of the original Bitcoin chain, and they're the next like Bitcoin Satoshi's Vision or Bitcoin Cash or whatever, you know, without wanting to be. So while I do love Bitcoin and I love the algorithm and I love the proof of work and I love the idea of it, it is all based off of gold and the idea of digital store of value and everything. But let's remember too, what was the original point of Bitcoin? Peer-to-peer trustless transactions. Okay? But now what is it? It's a store of value. Okay? And it's supposed to be discrete, and it's supposed to be like, you know, open source, and it's supposed to be a public ledger. But people are not supposed to be able to tell who's doing what on it. That's why specifically in the white paper it says that every time you make a transaction, you should be using a different wallet address so that no one can trace, you know, where that money's coming from or who it's going to or who it belongs to. But now what's happened? All the exchanges and all the mining has all become centralized. So you essentially have massive pools for the mining, and then you have massive exchanges that have centralized the crypto. And then what's happening on top of that? Now you have the government stepping in all over the world, especially in the United States, and they have created essentially, KYC, know your client, know your customer. So now they require you to provide, all your information. So now they know exactly who those wallet addresses on the exchanges belong to. So that's fine if you're not doing anything wrong. That's totally cool. But then what they want to do, the new law that they're trying to pass now, is that they want to know not only your address on the exchange and who it belongs to, but then when it transfers from the exchange, they want to know who it goes to. So now all of a sudden, in order to transfer your money back off of that exchange, assuming this law goes through and they pass it and it becomes, a requirement, now when your money goes to leave that exchange, they're going to know exactly what wallet it went to, what address it went to, who has it, where it's at. And what is the purpose of all this? To track and trace and tax. That's fine. If you're not doing anything wrong, you're paying your taxes, you're doing everything right. But that just brings me way back to, what is Bitcoin supposed to be? Trustless transactions and discrete. Public ledger, but trustless transactions that are discrete. Okay, so you're supposed to be able to trade Bitcoin directly with people without anybody knowing that you're doing it, for goods and services, without having to worry about them screwing you over, like calling their credit card company and saying that you didn't deliver on your end, or the product you sold them was bad, and then they get refunded and now you're out the product and the money. What did people use for that before? What was the store of value before? What was the trustless transaction before? It was gold. It was silver. It was precious metals. It was money. It was real money. So in this society that's potentially moving towards, the future and everything digitalized and everything, it just brings me back to China and them tracking and tracing and, facial recognition and, watching your bank accounts and, social punishments. If you smoke in public or you jaywalk, they can fine you, or now you can't travel, they can take away your passport, or, lock up your bank account or whatever. And everybody's talking about the digital future, and this is the future, and cryptocurrency and cryptography and all this stuff. And that makes me think that essentially we've corrupted something that was good. We created something amazing, and now it's potentially going to be used for evil, or, against you. What about when you go on, let's say, Craigslist? And again, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. I'm not a tax, consultant or whatever. I'm not telling you to not pay taxes. I'm not telling you to avoid paying taxes. I'm not telling you to do anything illegal. But say you want to sell some crypto. You sell it on the exchange, they tax you for it. You remove it from the exchange and they can't track where you removed it from, they could tax you for it because they could tell you sold it or spent it or did whatever with it, so now they can tax you for it. If you buy a bunch of gold or you buy a bunch of silver or something like that and you go on Craigslist and you sell it to somebody, how does anybody know you sold it? How does anybody know what you bought with it? There's no paper trail, the same way there's no paper trail with cash. There's no one to trust. There's no way to go back on the transaction. As long as they gave you, a real whatever you bought and you gave them real gold, everybody's good. But there's no way to undo that transaction, whatever. There's no way to trace that transaction. Maybe they could get phone records, this, that, and the other. But again, if you're not doing anything illegal and you're just transacting outside of like public view, you can go to a pawn shop with money, with cash, with whatever, and you can buy silver or gold, and no one knows you have that silver or gold. If you buy Bitcoin, people know you have that Bitcoin now. Matter of fact, a while ago, they were cracking down on people that were going and buying Bitcoin directly from other people. People were doing it through Craigslist, and there was like networks and different websites you could go on, and they shut that down. They tracked it because they don't want people to use it for that. So once again, brings me back to this idea that everything that Bitcoin was supposed to do digitally is modeled off of what you could do with gold and silver and what you can still do with gold and silver. But now you're not really able to do that with Bitcoin anymore, but you can still do that with gold and silver. So in many ways, I think it's very important to diversify, between cryptos and between precious metals and all different investments, stocks, etc. And again, I'm not saying to do anything wrong. I'm not saying to break the law. I'm not saying that you shouldn't pay your taxes, anything like that. I'm just saying that a lot of the reasons that people swear by and want to be a part of Bitcoin are modeled after something else that already does it and already does it better. So pay attention and think real hard. Are you buying Bitcoin as a speculative asset? Are you buying it with hopes to sell it to someone else for a higher price? Or are you buying it to do all those things? Because if you're buying it as a speculative asset, that's completely fine. If you're buying it to do all those other things, it doesn't do those things anymore. And if it does, you're leaving an electronic paper trail, and you have to be real careful, and you're potentially setting yourself up for a bunch of trouble. As where you can just go down to a local pawn shop, buy some Bitcoin, or buy some gold, buy some silver. You can go on Craigslist. You can trade your silver and your gold for other things. And there's no paper trail. There's no records. There's no public ledger. There's no government tracking you. You can go buy gold and silver at a pawn shop, and then you can sell it on Craigslist, and you don't get taxed for that, because all you did was took your currency and bought money with it, and then you took your money and traded it for goods or currency. So there's no actual investment taking place. You didn't buy and sell stocks. You're not paying capital gains tax. You're not paying income tax if you didn't hold that asset for over a year. Very important to pay attention to, because I think that there's a big misconception right now going on. Now look, someone like Chamath or Michael Saylor, they can't take $500 million down to the pawn shop and buy gold or silver, okay? So they're not in that position where they can do it. So pay attention to the amount of money that you're trading, the amount of wealth that you're trying to protect, and whether or not you're actually looking for a store of value, a speculative asset, a get-rich scheme, a quick flip, whether you're interested in paying taxes on what you do, whether you're interested in people knowing what you do, what you have, all that different stuff. So, because there's, it's just as likely that they could find an asteroid full of gold and all of a sudden gold goes to zero after, 10,000 years, that it is that, somebody hacks the Bitcoin network and it goes down. Matter of fact, it's more likely that that happens, or there's a solar flare and it wipes out the Bitcoin network or whatever. So look at them both as a hedge against the system. And right now, the system looks like it should be hedged against, because there's so much uncertainty and so much craziness and so much, devaluing of currency and everything like that. But be careful, because right now we're in uncharted waters, unprecedented times. We don't know if there's going to be inflation, hyperinflation, deflation, stagflation. No one knows for sure right now, okay? That's why people are saying that they're making speculative bets. People are using things as a store of value. People are making use of things like schmuck insurance. And this is the last point, and then I'm going to get out of here because it's already way longer than I wanted to talk about. But, I miss you guys, and I miss doing this as I took this last week off and everything. But got to pay real close attention to what's going on here, okay? Because there is a lot of moving parts in this, and we have to be very careful as to exactly what we're falling for, because I keep hearing people say no one's selling. They want your Bitcoin, they want my Bitcoin, and we're not selling. There's no sellers. All there is buyers. Okay, the way these markets work is there's hard assets, in this case digital hard asset like Bitcoin, and then there is leverage. Leverage is the same as paper trading in gold markets. So you have physical gold and you have paper trading. You have, digital Bitcoin that you have the keys to, and then you have, futures contracts. So with the futures contract, you do not actually have to have that Bitcoin to sell. You just have to have the money, and then you basically say, I want to borrow $1 million in Bitcoin, and then I'm going to sell it, and that's a short, and then I will later on pay you back that $1 million worth of Bitcoin. So if I borrow whatever it is, I'm not even going to do the math. Let's say I borrow 1,000 Bitcoin. I pay, basically a percentage as a loan while I have that Bitcoin borrowed. And then at some point in time, I have to pay back those Bitcoin. So if I borrow, 1,000 Bitcoin, I owe back 1,000 Bitcoin no matter what the price is. The idea is that you're going to take those 1,000 Bitcoin, sell them, and then rebuy them at a lower price. Therefore, make the profit of the difference between the price that you sold them for and the price you rebought them back for. And the person who loaned you those Bitcoin is going to make interest during the time that you basically they loaned you those coins. So essentially what's happening is you're borrowing coins you don't have from someone else, and then you can sell them. So the same way that paper trading and futures takes place in gold and other commodities and stuff is happening now in crypto. So you don't have to sell your Bitcoin. Nobody has to get your Bitcoin. No one has to have the Bitcoin to sell it. They have to have the money. They have to have the credit to sell it. And there's massive leverage in markets, 100x leverage, okay? So if you think for 1 second, I heard this, a long time ago, people always say, when retail misses the bus, they chase the bus. When institutions miss the bus, they bring the bus back. So we got a couple early institutions that are ahead of the game that essentially have helped pump the price up to all new highs. And that's awesome for those of us that are holders, speculators, whatever. That's great. But if you think for 1 second in a market that's $1.1 trillion, that somebody couldn't just come in with, $11 billion at 100x leverage or $110 billion at 10x leverage and bring that price right back, you're crazy. Okay, because it's been going on for years in gold and silver. And a matter of fact, very recently, JP Morgan, in line with 3 other massive banks, have had huge shorts on silver for years, for decades. They've had massive shorts on silver. I mean, we're talking about, trillion-dollar positions on silver that they did not have the silver to back up. And what they were doing is, quote-unquote, manipulating or suppressing the price. Well, regulation came in not too long ago, and the SEC said basically, yes, that was illegal what you did. And they had to pay massive fines. Millions and millions of dollars in fines for essentially, spoofing or doing illegal things. So if you think for just 1 second that these massive positions, banks, whoever, couldn't just come in, governments, couldn't just come in and do the exact same thing, paper trade Bitcoin back down to whatever price they want to liquidate your position, to liquidate exchanges, to clear out the supply, whatever, and then rebuy at a massively lower price, fill their pockets up, suppress the price for as long as they want, and then when they're ready, pump it to the moon, you're absolutely crazy. You're absolutely crazy. That's exactly what happened in 2017. They opened futures trading, and then all the government, the banks, all these people got together and said, time to tame Bitcoin. Let's smash it down. And it went from $20,000 down to $3,000. And everybody lost interest and forgot about it and thought it failed and said it was dead. For years, it was down at those lower prices. So do not think for 1 second that just because now it's $40,000 and before it was $20,000, they couldn't do the exact same thing again. So I guess that's all. I just wanted to make that point because I think people are getting delusional. I'm hearing all this crazy talk again. I don't think it's unrealistic that we hit $100,000 or $1 million or whatever one day if Bitcoin is really the answer and it succeeds and everything's great. We're not that far away from $100,000 now. It's a 2.5x. That's nothing now. But just make sure you keep it in perspective. Diversify your portfolio. Take profits. Just in case. Because this is not a Bitcoin casino. This is a speculative asset. This is not a store of value. It is a speculative asset. And it's very important that we remember that. So, and again, I'm not saying I think this bull runs over. I'm not saying I don't think Bitcoin goes to 50,000 or 100,000 or a million. I'm just saying no one is talking about the truth of what could happen, what potentially will happen, and what to expect. And this is exactly how cycles work. They go through the exact same phases over and over again. And right now we are in euphoria. We are in euphoria. So be very careful. This could last for another day. It could last for another year. But just be very careful because we are in euphoria. Everyone is dumping all kinds of crazy money into stocks and cryptos and all this stuff. Everybody's trying to get involved at all these crazy levels of price to earnings, of massive gains have already taken place. And that's how you end up with someone else's bags. It's buying at the absolute top. And one more thing is, it's realistic to think that at some point in time in the near future that we're at least going to get a legitimate pullback. And why is that? Because once enough people are borrowing Bitcoin, borrowing cash to buy Bitcoin, levered positions to the upside, the interest rates on those borrowed cash from exchanges goes higher and higher and higher. And once it's just not functional anymore to borrow money to make the price go higher, it's so cheap to just borrow Bitcoin to short the price that it's easy to just smack it back down, make all that money on the way, and then reborrow at the bottom once prices have reset again, once the rates are low again, and then just do it all over again. And that's why you think markets always breathe in and go up and breathe out and go down. So Bitcoin is in a permanent bull market since its, inception, 2010 or whatever. We're 12 years in now, essentially 10, 12 years of crypto. And the whole time it's always gone up and gone down. It goes in waves, it goes in breaths, it goes in heartbeats. So we need to be very careful. And everybody's talking about how this is a store of value and it's digital gold and all that stuff. Bitcoin's not the only thing going up. There's a bunch of other shit coins going up. Some of them are good projects. Some of them are great protocols, provide actual services to the industry, have use cases, have a future, but a lot of them are just an idea in a white paper or a marketing campaign in a white paper and a couple of dollars, or, an important name in a white paper and whatever. So be very careful, because this is exactly what happened in 2017. And I'm not saying it's going to happen right now, but 2020, 21, probably going to be the year. And it could be in a couple months. It could be at the end of 2021. Who knows? I mean, looking at the year cycles, looking at the halving dates, looking at, technical analysis, fib targets, etc., you can get a bunch of great ideas. But most importantly, just remember, this is a speculative asset. This is not a store of value. You could say over time that speculating in this asset will net you massive gains, but you cannot sit here and tell me that this is a store of value and that's why people are buying it, because I just honestly don't believe it. And if you can argue that for Bitcoin successfully, I can argue that you can't for the rest of the other, 2,000 plus cryptocurrencies. So be very careful what you're investing in, who you're listening to, and the euphoria. When there's a bunch of excitement and action and everybody's standing next to it, watching, the rodeo, it's awesome. And it's hard to believe that it's ever going to end. But to the guy who's standing back, looking at the whole big screen, looking at the whole big scene and how things are unfolding, he sees it happening when you don't necessarily, because you're too close to it. So just be very careful. This is just a little bit of a reality check. I'm not negative on crypto or anything like that. I'm absolutely loving all the gains that we made. 2020 was a phenomenal year. 2021 is going to be a great year as well. All things considered, I wish everybody was reaping the rewards and the benefits and everything of it. But if you're here right now, you're interested, you're involved. And for that, I salute you. I appreciate all the likes, subscribes, comments, and the community itself. Crypto Trend Trader, and I'm out of here.